If you close your eyes and imagine the sound of money, what do you hear? Perhaps the rhythm of a printing press, rolling out bills that smell faintly of ink and control. But if you listen carefully, beyond the hum of machines, there is a quieter sound, a whisper, the kind that shapes nations, topples empires, and decides who prospers and who falls. That whisper belongs to the central banks. They do not stand at podiums shouting promises like politicians. They do not wave flags or command armies. Their weapon is subtler: interest rates, liquidity, and the illusion of independence. They move not by force, but by belief. They are the high priests of trust, and like all priests, their true power lies in what they choose not to reveal. The idea of a central bank sounds modern, but it is older than most of our nations. The first prototype was born in 1694, the Bank of England, a financial miracle disguised as patriotism. Britain was drowning in war debt, desperate for funds to fight France. A group of private financiers offered a lifeline. They would lend money to the crown if granted the right to issue paper money. That deal changed the course of history. From that moment on, the power to create money, once the privilege of kings, began to shift into private hands. It was an elegant coup. Instead of seizing the throne, they seized the mint, and the world barely noticed. Today, we are told that central banks are independent, free from politics, ruled only by reason and economics. But independence is a comforting myth, like believing the wind is free when it is pushed by pressure. Every central banker, from London to Washington to Tokyo, dances within invisible constraints, market expectations, government pressures, and global capital flows. They cannot escape politics. They just wear better suits. In 1913, the Federal Reserve was born after a secret meeting on Jekyll Island, Georgia. A small group of bankers and politicians drafted a plan that would define American money for the next century. It was not a cartoon conspiracy, no smoke-filled room of villains, but it was a quiet consolidation of power, justified by the noble pursuit of stability. Money, at its core, is faith, a shared belief that a piece of paper or a number on a screen has value. Central banks are the guardians of that faith. They do not just print currency, they manufacture confidence. When markets tremble, people do not look to presidents, they look to the bankers. What will the Fed do? Will the ECB intervene? What did the Bank of Japan say? Their words move trillions in seconds. They have become modern oracles, calm voices speaking in riddles like, "We will act as needed to maintain stability." Translation: You may not understand us, but trust that we are in control. And so we do. Economists love to talk about the invisible hand, the free market's self-correcting magic. But when central banks step in, that hand becomes a puppeteer's. They do not just respond to markets, they create them. Take quantitative easing. It sounds harmless, almost gentle, but it means this. Central banks inject oceans of new money into financial markets, buying government bonds and assets. They do this to stimulate the economy, and it works for some. Stock markets rise, asset prices swell, but for ordinary savers and workers, the cost is invisible inflation and growing inequality. The puppeteer's strings tighten, softly, elegantly, almost lovingly. Throughout history, every empire has learned the same truth: whoever controls the money, controls the empire. In Rome, emperors mixed cheaper metals into coins. In medieval Europe, kings borrowed from bankers they could not repay. In the 20th century, nations traded gold for paper. And now, in the 21st, we have traded paper for promises. The modern citizen does not hold gold or silver, they hold trust. Trust that their central bank knows what it is doing. Trust that inflation will stay under control. Trust that the next crisis will be managed. But what happens when that trust begins to crack? If money is faith, then interest is its gospel, the doctrine that guides behavior, rewards obedience, and punishes excess. Central banks discovered long ago that they did not need to shout to rule. They only had to whisper a number. 0.25% here, a small pause there, and the world trembles. In theory, interest rates are tools. In reality, they are levers that turn human emotion into economic motion. Picture a man in a dark suit walking up to a podium. Cameras flash. The world holds its breath. He clears his throat and says one sentence. We have decided to raise the rate by 0.25%. And just like that, markets surge, currencies swing, and billions move across continents. It is theater, a perfectly choreographed performance. Every pause, every glance, every tone is a signal. Investors study the words like scripture. Journalists invent phrases like hawkish or dovish, as if describing mythical creatures. But behind the ritual lies something deeply human: fear. fear that a single misstep could trigger panic, fear that the fragile faith holding the system together could vanish overnight. This machinery of control does not run on oil or metal, it runs on belief. When a central bank cuts rates, it whispers, relax, borrow, spend, grow. When it raises rates, the whisper changes, slow down, be careful, wait. The entire global economy, from bread prices to billion-dollar tech stocks, moves to this invisible rhythm. It is a dance to a song only they can hear. And yet, beneath the charts and speeches lies hypnosis. We think the market reacts. But what if it obeys? Look closely and the illusion of independence fades. When the Federal Reserve moves, the European Central Bank soon follows, then the Bank of England, then Japan. Different names, different nations, yet the same tune. They call it policy coordination, a polite term for what is really a global orchestra of monetary control. If one bank acts alone, its currency might collapse, but when they move together, as in 2008 or during the pandemic, they can flood the world with liquidity and rewrite the rules of debt. It is not conspiracy, it is choreography, a slow waltz of interest rates and asset purchases, performed under the banner of stability. But every waltz has a partner who leads, and in this one, the leader has almost always been the United States Federal Reserve, the quiet empire built on the dollar. The dollar is more than a currency, it is a language of power, and like any language, it shapes how the world thinks. After World War II, the Bretton Woods system crowned the dollar as the global standard, backed not by gold anymore, but by faith in American strength. When that gold link broke in 1971, the faith remained. We entered a new era. Not gold-backed money, but belief-backed money. And who guards that belief? The same high priests, the central banks. They decide when to print, when to restrain, when to whisper that all is still fine. And as long as the music keeps playing, the crowd keeps dancing. There is a darker side to this machinery. Each intervention breeds dependency. Each bailout, each liquidity injection, teaches the same lesson: the bank will save you. Investors stop fearing risk. Companies gorge on cheap debt. Governments overspend, trusting the printing press will sing again. And the system grows fragile, not despite the control, but because of it. A body filled with artificial stability forgets how to stand on its own. It is like giving morphine to a patient who needs surgery. The pain fades, but the illness deepens. Central banks are praised for preventing collapse. But what if they have only delayed it? Each time a crisis erupts, they lower rates, buy assets, calm the people. The market breathes again. Confidence returns. But beneath that calm, debt climbs higher, bubbles grow larger, and inequality widens. The medicine has become the addiction. It is not malice, it is fear, fear of letting the system burn. So they keep patching the cracks, knowing that one day the dam will break. Every system, no matter how divine it seems, eventually faces the test of belief. And when belief cracks, even slightly, the fire begins to spread. We like to think of money as metal, paper, or digits on a screen. But it is not. It is trust, condensed into a symbol. And like all fragile things, once trust is questioned, it does not fracture slowly, it shatters. Imagine waking up one morning to find your currency worth half of what it was yesterday. Your savings, your work, your plans, your safety, suddenly meaningless. For millions across history, that nightmare was real. It was the Weimar Republic in the 1920s, where children played with stacks of worthless marks. It was Argentina, where the peso died in the streets. It was Zimbabwe, where trillions could not buy bread. Inflation is not just numbers rising on a chart. It is the sound of belief dying, one receipt, one paycheck, one sigh at a time. When central banks lose control of trust, their most powerful weapon, the printing press, becomes their curse. They print to heal, but each note burns the very faith it was meant to restore. In those moments, money transforms from a symbol of value into a symbol of betrayal. People rush to exchange paper for anything that feels real: gold, property, even memories. The market becomes chaos, not because numbers change, but because meaning does. And in that chaos, the illusion of control disappears. The machinery hums, but no longer obeys. But humanity has a strange resilience. When old gods fall, new ones rise. Once, we worshipped gold. Then, we trusted paper. Now, we bow before code, digital currencies, decentralized systems, blockchain promises. Each new faith begins the same way, with hope. This time, it will be different, we say. This time, power will belong to everyone. But power, like gravity, always finds its center. Even decentralized dreams are haunted by centralizing forces. Exchanges, regulators, corporations, and now, central banks themselves, experimenting with their own digital currencies. The circle closes again. Control reborn in a new language. We are entering an age where money will not just be seen, it will be tracked, measured, and predicted. A world where every transaction tells a story, every purchase feeds an algorithm, and every algorithm whispers back to the market. Central banks no longer need to print or raise rates to steer the economy. They only need data. It sounds efficient, and it will be, but control will no longer feel like control. It will feel like convenience. The new chains will not be made of iron or debt. They will be made of comfort. No inflation, no chaos, but also no freedom. Still, beneath the algorithms and policies, there is something no model can capture: the human pulse. We are emotional, irrational, unpredictable, and that is our only defense against total control. Because systems built on numbers forget one truth: numbers do not dream. We do, and when enough people start dreaming of a world beyond managed money, beyond curated trust, history bends again. Empires of paper fall, new currencies rise. The cycle begins anew, not because central banks allow it, but because humanity demands it. So, are central banks the hidden puppeteers? Yes, but only as long as the audience believes in the show. When belief fades, the puppets fall still, and the stage burns. Out of that fire, something raw and human always emerges: the instinct to rebuild, to reinvent trust, to start again. Money will change, systems will collapse, empires will vanish, but one thing never loses value: human belief. That, in the end, is what every banker, every emperor, and every dreamer truly chases. The future of money will not arrive with explosions or banners. It will come quietly, through updates, apps, and new terms of service that nobody reads. No revolutions this time. Just a gentle transition, from cash to code, from possession to permission, from privacy to prediction. And when it is complete, we will not even remember how it began. There was a time when money was something you could feel: coins cold in your palm, paper folded in your pocket, a weight that said, "This is mine." Now, it is light as air, invisible. A number on a screen, a record somewhere in the cloud. The magic of the digital age is that it makes control look like convenience. No more waiting in line, no more lost wallets. But convenience has a cost. Every transaction you make, every tap, every transfer, it all speaks. Not to you, but to the system. And the system listens. Central banks once moved in months, then weeks, then days. Now they move in milliseconds. The next generation of banking will not rely on committees or press conferences. It will rely on data, oceans of it. Machine learning predicting your next purchase before you even think about it. They will call it smart monetary policy. A system so efficient that crises are detected before they happen. Inflation managed in real time. Growth optimized like code. But what happens when a system knows you better than you know yourself? When it does not need your permission, because it already has your prediction? That is the silent revolution, not in power, but in perception. We already live in a world where attention is the most valuable asset. Social networks trade it, advertisers buy it, algorithms harvest it. The next evolution will merge money and attention. Imagine earning not by working, but by watching. Spending not through banks, but through your fingerprint. Loyalty points, crypto tokens, digital wallets, all blending into one single identity. It sounds efficient, but efficiency is not freedom. Freedom is friction, the small human hesitations that machines erase. When money becomes perfectly smooth, so does control. Still, beneath the glass of our screens, rebellion flickers. Whispers of new systems, decentralized, open, untamed. A belief that maybe we can rebuild the idea of value itself. Blockchain was not born from greed. It was born from mistrust, from a generation tired of invisible hands and silent strings, from people who wanted math, not monarchy, code, not kings. But even there, control found its way back, through exchanges, regulation, and digital monopolies. Rebellion is easy to start, but hard to sustain, and yet it always returns. There is no system, digital or otherwise, that can outsmart the human heart. No algorithm can measure hope. No policy can price the value of trust freely given. Central banks can move markets, but not souls. They can print money, but not meaning. And meaning, fragile, emotional, unpredictable, remains our greatest defense. The more advanced our systems become, the more ancient our desires reveal themselves to be: love, safety, belonging, purpose. The machinery hums, the data flows, the world turns. But beneath it all, a whisper remains. Value is not what you hold, it is what you believe. There is no system, digital or otherwise, that can outsmart the human heart. No algorithm can measure hope. No policy can price the value of trust freely given. Central banks can move markets, but not souls. They can print money, but not meaning. And meaning, fragile, emotional, unpredictable, remains our greatest defense. The more advanced our systems become, the more ancient our desires reveal themselves to be: love, safety, belonging, purpose. The machinery hums, the data flows, the world turns. But beneath it all, a whisper remains. Value is not what you hold, it is what you believe. The silent revolution will not end with the fall of central banks. It will end when people remember that they were never the puppets, they were the dreamers. Money will evolve again, as it always has. Empires will fade, new systems will rise. But the story will remain the same, a story of faith, fire, and the unyielding will of human imagination. And in that quiet dawn, when the code cools and the data rests, we may finally hear it, the heartbeat beneath the system, steady, human, and free.